We'll try to give everybody a few more minutes here. Maybe a little bit longer before we start.
Stoffmatratzen voll mit Racks, rauch ein richtig fettes Pack, bin kein Nerd, doch hab ne Tag, seh einen ab und mach ihn weg.
All right. Let's get to it. Give it a few minutes here for everything to catch up. All right. There we go. All right. Sorry about the echo. Having some issues here with the software. If you guys got any recommendations when it comes to OBS, live streaming, YouTube, Twitch, and all that stuff, let me know. I'm just having some small difficulties, but we'll get through it. So anyway, welcome back to another live here. Hopefully you guys have been watching the previous ones and was able to get something from it. I've been trying to do this more consistent and really trying to break down my thought process when I enter and exit the market, some of the positions that I catch, and the moves and what I've been thinking about when I'm in the positions and what I'm looking for, and even some of the stuff leading up to the trade actually happening. I want to be transparent and show you guys that. So that's what the whole point of me going through lives is for. Me posting screenshots in my Discord doesn't seem to be as useful as me going live. So, and then also feel free to comment in the comments if you guys are watching this after I went live. Please tell me if the audio is better or not. I've been working on it. So look forward to your feedback with that. So some of the things that we talked about before was order blocks, the type of go strategy, fair value gap, smart money, what the economy is looking for right now. We'll start with Market AI. I was asked to do a video talking about Market AI. This is a platform that I use all the time. I really don't use anything else. I don't even go on Forex Factory anymore, if I'm being honest with you, because everything is listed here. Anything that you might want to know, whether it's earnings or high impact news or what Trump might end up doing or what he might tweet or who he's meeting with or geopolitical news overseas, live events that might pop up, all of it's here. You don't have to go looking for it. So it's a little different when you have all the information being sorted and pushed to you rather than you having to go look for it. One of the biggest headlines right now, if you guys missed it, was NVIDIA pretty much getting approved by the U.S. government, by Trump, to export its chips, which is interesting. So now we're going to be able to export NVIDIA chips over to China. So it sounds like they might have made a deal here. And it says here, Trump announces 25% tariff will be paid to the United States, signaling a major trade policy implementation affecting all imports. So that's interesting. We're still in the middle of a trade war, right? And I guess the Chinese government reacted positively, signaling de-escalation. So these guys, I want to go over this, and I want you guys to notice how the moves that we catch on the charts show before the headlines. All right, those of you guys that's been following me for a long time, I always tell you guys, especially my mentees, and feel free to chime in, I always say the news is delayed. News is not for you to base your trades off of, but more so to create FOMO, right, and create liquidity in the markets. That's the whole point of news. It's delayed. The people that know what's going on are sitting in the White House. I just want you to understand that. These companies have people literally sitting in the White House trying to push policies that they can take advantage of. All right? I'm going to say that one more time. The bills, these tariff decisions, the high impact news events, these bills that are being passed, there's lobbyists and there's people that represent these companies, these Fortune 500 companies, that are pushing for policies to be pushed and approved that have their best interests in mind. And they will know if they're approved or not before the rest of us. Okay? So if you guys ever seen, what was it? I was watching it last night, Wolf of Wall Street. And they were talking about how you can give him money, or he tells you when to make the right trades because he's the market maker. He's the one that's pumping the market. So he'll tell you what to buy and what to get out of because he's the one that's manipulating it. Same thing here. So what you see on the charts you will know if we're in trouble, or you will know if there's a policy change, or you will know if there's some type of positive impact in the economy. On the charts, you will know that before you see the news event. So I say all that to say, don't think that Market AI is going to tell you what's going to happen, because if you guys learn the strategy and you guys know how to read order flow and you guys are following me, you guys are going to know before it actually hits the headlines, okay? So you can call it telling the future. You can say that it's being proactive, but I use this as a confluence to tell me what might happen as far as politics goes, and it's good for me to keep up with what's going on as far as high impact news and on the calendars and stuff like that. But guys, don't get this confused. Our strategy, you will know what's going to happen before it hits headlines. As long as you can pay attention, you show up to these lives and you practice every day on your charts and you mark out your higher time frame levels, you will definitely know before everybody else does. So as far as high impact news that we got coming up here, it looks like we have nothing set up for Tuesday, which is great. Tomorrow is December 9th. Wednesday is December 10th. That is our next day for our high impact news. And look what we're anticipating. We're forecasting another rate cut. We're down to 4%. Everyone's anticipating another rate decision. I'm going to be honest. I don't think we're going to get another rate cut. Just going to be honest with you. I see that the market is already moving positively. The only reason why that they would give us a rate cut would be to stimulate the economy. But after all this talks about trade wars and all this stuff and tensions de-escalating, I don't think we're going to get a rate cut. Now, if that happens, okay, and let's see if Market AI can tell us this. Okay, good. So right here, Market AI even says if it's higher than forecast, which means if we go ahead and we get this rate deduction, right, and it's more than what we're forecasting, which is 0.25%, then of course, vice versa. If it is going to be a higher rate and they don't lower rates, okay, let's just say that they keep rates the same at 4%, currencies will be bullish, but equities will go down, absolutely bearish. The market will absolutely flip and be bearish if they do not drop rates, because everyone's anticipating a rate cut. But if they do drop rates, then of course currencies will be bearish, and all that money from currencies will go into equities and gold, because that's positive news in the economy, and they're expecting it to be bullish because we're getting another rate cut and it's going to stimulate the economy, right? But if it's the same, then it's going to be neutral. Okay, so these are some of the tools you can use if you guys aren't that familiar with the feds and how it affects the economy and vice versa. This is a good tool for you guys to use to kind of keep up with what might happen, and you can set up a trading plan based around that and frame a risk. So that's what I got for high impact news. That's what we got on the calendar. I really have nothing else that I'm interested in. I'm not trading any stocks right now. I'm not trading any equities, but as you can see here, they do have the tickers along the top here, especially Warner Brothers, because I know you guys just heard about them buying Netflix. So those of you guys that might want to invest into those equities, you can. Let's see here. Let's see if Market AI gives us a... Here you go. So we click on Netflix and it generates an analysis for you. We'll give it a second here. And it will tell you why it dropped. It will tell you what's going on. And believe it or not, the news about this acquisition is not what people wanted to see. A lot of people feel indifferent about Warner Brothers, and they also feel indifferent about Netflix as well because of political issues, okay? So feel free to dive into this. If you guys want to get more information, it's on here. This isn't what this live is for. I'm just really trying to do a market breakdown, but I just want to kind of showcase some of the tools. Every day I'm going to showcase some of the tools that Market AI has. And if you guys are interested in signing up and using this platform to help you frame your trades and for you to keep up with market analysis, feel free to click the link in the description of this live. I do have a link there for you guys so you can take advantage of this. But this is something that I look at every single day. This is a tool that I use. On the next live, maybe tomorrow, I'll show you how you can hover over these candlesticks and you can see what happened on each candlestick, if news events might have hit or vice versa. So that's also another useful tool, especially when high impact news might have hit and you might not have been able to catch it and you see just a spike. You can hover over these candlesticks and it'll tell you what's going on. So we'll cover that on the next live. I'll probably do that tomorrow for you guys. So look forward to that. Also, we are going to talk a little bit about prop firms one more time. I'm going to search through the previous Forex props that I was trading with before to see if they have any changes in some of their rules or whatnot. But Hero FX is another broker that I use, and we'll cover that as well after we do our market breakdown. Okay, so let's go ahead and switch on over to our charts. And if you guys have any questions, feel free to type it in the chat. Type it in the chat here. I am watching it. Any questions that you guys might have, or if you guys might have asked me something in the past and I didn't answer it, feel free to chat in the chat there, and I'll go ahead and acknowledge it, and we'll go ahead and talk about it. Okay. So let's go ahead and get on these charts here. Let's talk about the trade that I took earlier today. This is Intel, by the way, guys. I know in the last live I didn't talk about it, but the previous one I did, and we discussed how Trump wanted to purchase a semiconductor company. They wanted to get in the AI race, but they wanted to be government backed. Intel was a great stock. Last we talked about it being bullish, and it's just been bullish ever since. Here we go. We have a fair value gap that Intel is retracing into. I don't really like how this daily candle was so bearish here, but if it can hold this level here, this $39 level, then I can expect to see higher prices. It could just be a slight pullback to give us a push to the upside. This is my overall target, which is $68, as you can see. So this is a level I want to see held. I think when we did the Zoom, we talked about this candle closing above this fair value gap and turning this into an inverted fair value gap, which we do have. I have an alert set here at $38 to see if it fails. But if it holds and it doesn't fail, I am targeting $46 first for buy side. Okay, so $46 is going to be our first TP area, and we want to see how it reacts when it gets to that level. Now, if it wicks up there and absolutely melts, then we already know that they just wanted to target liquidity, and Trump was just trying to FOMO retail traders into being bullish into Intel. But I got a strong feeling that that's not going to be the case because we do not have a government-backed semiconductor company or computer company or anything. We do not. We have Palantir, which can monitor surveillance and data, and they use AI and all that stuff, but we don't have any type of domestic semiconductor companies besides NVIDIA or any type of domestic AI companies that Trump can control, and that's what he wants to do. He wants to be able to have influence over that particular stock. So I will be keeping my eyes on Intel, but this is my level here, and I guess I just got to be honest with you guys. The strategy is a strategy. This stuff has been working for me for over about 3 years now. I've been back testing it, and if this level holds, then we can definitely see all-time highs. If it fails, then of course we might want to look out and get out of the way. This is not financial advice. So let's go ahead and switch over to NVIDIA. I'm sorry, not NVIDIA, NASDAQ. This is what I was trading earlier on a smaller time frame to just kind of give you more examples of the tap and go strategy that I use all the time. And guys, in my screenshots, I am typing in tap and go just so you guys can see that it is me trading. We are not faking our trades or anything like that. Okay. So let's see here. All right, so today we'll just call out the short that we were looking at earlier. Let me pull up my, I don't think it's going to show me my executions because the session's already over. Let's see if I can find what I was looking for here. Took two shorts here. I think it was on a 1 minute time frame. All right. So again, I'm just going to walk you through my thought process, guys. Just so you can apply it on your own if I'm not around. I'll do that. Okay. So what do we have here? Okay. I always tell you guys, first things first, before we really start looking to take any trades or anything, we need to be activated first. And in order to be activated, we got to have some type of sweep of liquidity. So that's either a sweep of buy side or a sweep of sell side. There's really no point of us entering a position if we don't do that first. The reason why is because we're trying to have a clear indication of order flow. We trade with the banks, not against them, and a real tell sign to tell if they're going to be in the market or not, or if they're even participating, is the way it reacts when it sweeps liquidity, okay? Because they're the ones that's ultimately moving the market anyway. So if they want to take out a higher low, the market makers are the ones that's going to be involved, and they're the ones that's got the most volume. We don't need all these fancy indicators. We can literally just wait for our levels to get hit and watch how price reacts, whether it moves away from it or gives us continuation moves, okay? So the first order of business that we had here was let me pull up here, entry was right below the higher time frame order block, which is right here. So we had a sweep of buy side. Well, first of all, let's back up here. So how did I find this level? Why is there a higher time frame order block here? And why is there a negative sign here? That means that we closed below a level that was previously support, right? Or I like to use the word our floor. So the level that I was anticipating price bouncing off of and continuing higher, it broke that level and closed below it. So guess what? If we close below that particular level, next time we revisit it, I'm expecting to use that level as jet fuel to go in the opposite direction. So, for instance, right here, this was the order block level here. When I zoom out on the 15-minute time frame, you'll see rejection, rejection, rejection. All this right here is an order block. This whole level here is an order block. When you see signs like this, there, here, here, this is a very, very powerful level. And for some reason, this hedge fund or this large institution did not want price to go lower than that yet. Instead, what did they do? They let price sweep buy side liquidity, edged everybody for this level up here, this buy side level that I had over here to the left. They edged everybody from this high and absolutely dropped it. So once order flow was bullish, that's when they flipped it. Now, once we closed below this level, I went to the smaller time frame to find specifically the zone of rejection, right? And if I draw a trend line here, you guys see it, that order block. I draw this trend line here on a 15-minute time frame, you'll see that we literally wicked into the bottom of that order block and gave us a continuation to the downside. You will also see my favorite move that I always talk about, my equal extension move that I haven't taught you guys yet, but the exact extension that I was anticipating. Oop, right? Continuation measurement, minimum sell side liquidity. So knowing all that, the question still stands: how do we trade it? How do we get there? Where do I put my entry? Where do I put my stop loss? Great. Let's go ahead and go down to the small time frame here. This is the 5-minute. All right. What do we have? We have a sweep of buy side liquidity after price pushed up to the bottom of this order block. So I saw this order block here, retrace into it, respected it, gave us plenty of rejections, gave us one more wick above buy side liquidity before it melted. Drop to the 3-minute time frame, same thing. Rejection, rejection, rejection of this fair value gap. Draw it out so you guys can see it. This FVG right below that order block. Is it a coincidence that we rejected the midline, which resembles the tap and go strategy? No, it's no coincidence, guys. Like, my strategy is very easy. I tell you exactly where to enter and where to put your stop loss. Enter midline of fair value gap, especially when you have a sweep of buy side liquidity, stop loss above that FVG or above the most recent high. In this case, it would have been right above this fair value gap because the risk to have a stop loss this high was just not worth it. So entry at the midpoint after the sweep, drop to the 1-minute time frame. What do we have here? Higher time frame order block rejection, sweep of buy side liquidity, rejection of buy side liquidity, absolute flush from a previous fair value gap in a 1-minute. Okay, here's your fair value gap here if you guys missed it. Okay, that level is very important. The fact that I have price, I don't know if you guys noticed or not, but the fact that we have price dip that far below that fair value gap tells me that that is not going to be support. So even when price wake back up above this high, I know the price ultimately wants to flush past this FVG. So what does it do? Flush through that fair value gap, candle closure. Fair value gap turns into an inverse fair value gap. This is officially the tap and go. You can enter anywhere in this FVG. Now, sometimes price is going to be a little sloppy, But remember that this is the ultimate rejection zone. This is your confirmation. So flush below the fair value gap, turn into an inversion fair value gap. Target would be sell side liquidity here or down here. Now for me, I was able to catch the drop before it inverted this fair value gap because I saw everything leading up to it, and I was able to take TP here. You saw me switch accounts. Once we broke below, I took another entry from here, right? The midpoint of this higher time frame fair value gap. When I'll zoom out here so you can see it. This higher time frame fair value gap got invalidated to give me that continuation candle that I showed you before, which would be that equal extension. Target would be sell side here. After that zone was hit, next TP would be this fair value gap down here. Now, after I took TP, guess what? I went ahead and got ready for the setup for the long. But this time, what do we have? And I screenshotted this and I'll put this in my group. What do we have? We have a sweep. After we took the short, we have our sweep here, right? Now, this time you have to move fast because my TP target got hit pretty quick. Sweep of sell side, right? Push to the upside, target hit, buy side liquidity. Game over. That's it. In and out. Now, after it retraced down and sweep again, you can look for another entry after it recovered. But that's it, guys. Your TP will always either be buy side liquidity or it will be the opposing fair value gap. So don't be greedy. I told my group this. Do not be greedy. Just because you're pushing up, you got a bullish candle just like right here, for instance, because this is the actual trade. Sweep of sell side, push to the upside. TP is going to be this fair value gap right here. I'm not being greedy, thinking it's just going to turn this into an inversion fair value gap. No, I'm entering after the sweep for my first entry. Sweep entry was right at that wick because I was pushing into a higher time frame fair value gap that you can see to the left here, right? So once we filled this, that was my entry point in that middle point. But if you missed that entry, guys, if you missed that entry, once again, the tap and go did kick in. You could enter at this fair value gap. You could zoom in so you can see it. That FVG could have entered at the midpoint, stops below the low, and you could have been targeting that fair value gap if you missed that first one, okay? But after that, after you see it fill the fair value gap and reject it, that's it, guys. Because even if you see this, it gave you another tap and go to the downside, okay? Enter fair value gap rejected, inverted this fair value gap here. Entry could be the midpoint of that FVG, targeting sell side liquidity, which would be here. Or if it gave you another entry right there, you could have targeted sell side again there as well. So it's really that simple, but you got to move quick and first of all, you guys got to get plenty of rest before you guys get on these charts, because as you can see, these moves happen so quick and it's almost like finding a needle in a haystack. It's very rewarding. It's very, very rewarding if you guys can prepare for these moves. Guys, these trades are paying $2,000-$3,000 per trade. That's what we're averaging with this strategy. So if you guys can see them, they can be very, very powerful. And if you can line everything up correctly, especially with your higher time frame analysis, these candlesticks are explosive. And if you can trade the strategy correctly, you can catch engulfing candles. All right, none of this chop. We're waiting for, it's a 4-step process: sweep, confirmation with an engulfing candle, leaving displacement, leaving a fair value gap, entry at the FVG, right? Target is going to be opposing liquidity or fair value gap, okay? It's literally that simple 4-step process. So that's what I traded today. Hopefully, I'm going to keep doing these, so hopefully you guys can start to catch on. And if you guys have any questions, make sure you join the Discord, send me your charts, send me some ideas, and I will gladly go over it. But until then, the tap and go is definitely going to be, it's probably going to take over all 2026. And you're probably going to start seeing more and more people use this strategy. All right, so let's start over. Let's get prepared for tomorrow, okay? We don't have red folder news tomorrow. So what does that tell me? That tells me that we're probably going to see some choppiness. Don't be surprised if we get a lot of consolidation tomorrow, which would be one of the phases that we always see. We talk about this in every single live. Hopefully you guys can finish my sentence for me. I'll be looking forward to it. That'll tell me that you guys are learning. So what is it that we are looking for? We have 3 phases that we see every single day. The first phase is going to be, let's see if you guys can answer it. First, it starts with an A. What's the first phase that the market always does before we can get a good move? I'll help you with it. Accumulation, that's going to be the first phase. What's the second phase that fakes everybody out, makes everybody FOMO into a position so they can take advantage of order flow? I'll give you guys a couple seconds to answer that one. All right? Because this is what's going to happen leading up to news. So this will tell you the day before what might happen. So we have accumulation. What's the second phase? They got to get orders. If they're gonna manipulate the market, they got to own the stock first. They can't just manipulate it if they don't own the shares. So they buy all the shares, and then what? They gotta hit everybody with the Allen Iverson crossover. That's the manipulation phase. Okay, so fake everybody out to go one way, just so they can send price the other way and take advantage of everybody. That's when you get all that FOMO, all this Bitcoin was approved by the SEC or the government wants to do this for crypto, blah 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 blah. It's like a meme coin. It's just to hype everybody into that particular stock, just so they can rug pull everybody. So accumulation is the first phase. Manipulation is the second phase. Our third phase, see if you guys know, distribution. Third phase is distribution. So accumulation, they got to own the stock first. Manipulation, they got to FOMO everybody into the opposing direction that they're trying to target. And 3, the distribution phase, which means that they're actually price delivering where they were intending to go in the first place. So leading up to news, all right, leading up to a red folder event like monetary policy, rate cuts, stuff like that, tariffs, stuff like that, Powell speaking, we can anticipate accumulation, and we're gonna see this on a higher time frame. The only way that you guys can be prepared for this kind of stuff is when you see it on a higher time frame. So, all right, we're zooming out to the 1 hour. I see it clearly. Let me clean up my charts here so we can all see. Where's my eraser tool? Let's erase some of this stuff. I don't need all this stuff. We already took out those trades. We're gonna erase that. Top and go. You already know what it is. Boom, boom, boom. Okay. So, what do we have here? What do we have leading up to tomorrow? We got, for us to know what's going to happen the next trading day, we got to go back in time, look left, and see what has happened leading up to current price. You got to build a narrative. That's part of the strategy. If you guys can't see what happened leading up to current price action, then we really don't have much going on. Us zooming out on the 1 hour time frame. 1 hour time frame. This is me zooming out, looking at price. What I'm seeing here is we got price bouncing between 2 levels. Just literally barcoding. It's ping ponging back and forth, back and forth. That screams accumulation. Okay? Now the next phase that I'm expecting is manipulation. But how are we gonna get there? Where you say manipulation, where's the level? Tell me where to trade. Cool. So what we have here, we have buy side that never got tapped to the upside. Let's zoom out to the 4 hour here. This buy side level, I told you guys a couple zooms ago, I wanted to see get hit because we got a fair value gap right here. And I'm gonna be honest, I like to use my magnet tool for this, right? I'm expecting price to come here. Now, am I expecting a Santa Claus rally in December? Am I expecting all-time highs in December? Absolutely not. But can I see us fill this FVG? Sure. What am I expecting to see in order for us to fill this fair value gap that I'm expecting price to gravitate towards? I'm glad you asked. I'm expecting to see price somehow hold one of these levels here and continue to the upside. But what did we have before then? Why did we edged it? Okay, we swept buy side, which is what could have been the target. We swept this. We filled this fair value gap. We closed above it, but then we closed below it, and now we're retesting it. We're retesting the midpoint of that fair value gap. So if this FVG doesn't hold, I'm going to put this back to a fair value gap so I don't get confused. Guys, make sure you're keeping your clean charts up. Make sure your charts are always clean. You guys don't have all these rainbows and all this colorful stuff going on. Because when it's time to press the button, you need to know you're pressing the right button. You can't sit here and try to color code everything. You got your levels. If this, then that, then that, then this. Make it very mechanical. Take the emotion out of it. That's why my candles are black and gray. So closure below the fair value gap. Until I see a... Guys, this is what we got, okay? Just so you can see it. Closure below, and here we're retesting it again, okay? Until I see price close above this level again, this fair value gap, until I see it close above it, I'm anticipating lower prices. That simple. This is the level. This is the line in the sand. If we can close above it and invert it again, then we're targeting minimum buy side. And you know we got a magnet here. I want to fill this fair value gap. But if we do not close above it, I'm using this level as my ceiling, and I am targeting sell side liquidity. Sell side is resting here. Now, what I can see is that somebody's manipulating price. somebody at the White House or wherever, Wall Street, BlackRock, somebody is manipulating price to rug pull everybody. How do I know that? Worm, how do you know this? How do you know that somebody's keeping it afloat? Let me tell you. This right here screams rug pull. Sell side liquidity. Sell side liquidity. Sell side liquidity. Sell side liquidity. Sell side. Sell side. And I could draw a big old trend line right here. All you trend line traders are about to get railed. So I'm saying, okay, guys, we swept buy side. We closed below a fair value gap. We got all this trend line here. All this whole level needs to get cleared out. Minimum. My minimum target is right here. I'm looking for price to at least sweep this sell side. Now after it does that, who knows? You can use it as jet fuel and absolutely take off to the upside. But I see all this build up here. I would love for us to clear all these orders. Why? Because they want you to be bullish. They saying, hey, we're gonna make everybody be bullish here. We're gonna make everybody from these lows be bullish here. And we're gonna this is them actually buying though. Because when you have these levels and these fair value guys get respected, it's actually buying. But what they understand is that somebody has their stop loss below these levels. And they need a pool of liquidity. Okay? They need liquidity to move the market. So what they're gonna do, if I was a market maker, I would figure out a way how I can manipulate price and smoke all these orders and stop everybody out and make them buy back every piece of stock that I have up here for a profit and then buy it back from the lows when they get stopped out. That's what I would do. But this is what they would do. They would keep price below this fair value gap flush, or let's go ahead and go down to a small time frame and look at the opposing trade. Now, if we go down to the 1 hour time frame. Actually, let's look here. Yeah, we got the 1 hour time frame here. I got a fair value gap screaming at me right here. Well, Worm, why aren't we using this one? You can, but a lot of times price goes to the extreme level is what I like to call it. They will blow past that level, make you be bearish just so they can take longs and go to the upside. I always wait for the extreme pullback, okay? So we filled this fair value gap here in the 1 hour. As you guys can see, we're pushing up into a higher time frame FVG that we're rejecting as well. I can see a pullback to this level. If price holds 25,640 midpoint specifically, okay, because we did sweep sell side here. I didn't even see that until now. This is sell side. It did sweep sell side. I'm gonna type tap and go. We might get a tap and go here, just so you guys can see it. So we did sweep sell side. We did give a displacement candle. We do have a fair value gap that price can retrace into. Target would be this FVG or ultimately this buy side level, or our ultimate target, which is where our magnet's pulling. You can either be this buy side, this is another high time frame buy side level, or this fair value gap. So if we can hold here, if we can hold 25, this might be a banger trade for tomorrow, y'all. For I hope you guys are paying attention. If we can hold 25,635, then we can see higher prices and take out this high. All right. But if it fails and inverts it, guess what? That tells us we're about to come smoke all of these orders down here for sell side liquidity, which I've been waiting for a long time now. All right. So that'll be my game plan tomorrow for NASDAQ. Really simple, really mechanical. If it's going to be bullish, I got to trade for that. If it's going to be bearish, I got to trade for that. All right. So that's what we're going to look for tomorrow. And let's see here. We'll see if we go live tomorrow. Maybe we'll go live tomorrow for the trading session. We'll see. All right. So let's go down the list here. Let's start with Google. What do we got? Sweep a sell side. See this right here? This is the equal extension that we talked about. Did it play out? To the T. Let's look at the higher time frame where we saw that equal, where we measured that. Look at that. We measured that equal extension from this level here. This level here. And we said it could pull back and pull it back a little higher than we were anticipating, but it absolutely flushed it, ended at this low as I anticipated. In fact, it landed at this fair value gap here. I don't know if you guys can see it. Landed right there. So it dipped into there. And now it's giving us another retrace. So let's clean up our charts here. Did a sweep sell side? Yes. Let's see what it does next. But price is holding these fair value gaps that we had marked out before. So until we start seeing price break above some levels and invalidate some fair value gaps to the upside and use them as jet fuel, I'm anticipating lower prices. And as of right now, we're retracing into maybe this order block here, or possibly the extreme level, which would be the midpoint of this fair value gap. So let's clean up our charts a little bit. I'm going to delete this one here because we already rejected that one. And we're going to draw an FVG on this 4-hour candlestick. Guys, the larger the time frame, the more likely price is going to respect it, okay? So you guys want to know, well, why aren't you looking at the 5-minute fair value gaps? Well, the higher the time frame, the more weight, right? The more likely it's going to actually give you a reaction. So midpoint here, I would love to see price not go above 317 for Google. For those of you guys that's going to be trading options tomorrow, if you can get a short or a put anywhere as close to 317 as possible, stops will be above this fair value gap, because if price keeps pushing, it's definitely going to go much higher than 317. Okay, but sell side right here, this is a fair value gap that we want to see price close below. If you guys missed this entry, close below this level to possibly fill this gap here. We do have a daily gap right there. This is the 305 to 302 level that has to get filled. I treat those areas just like fair value gaps, but those are my levels to the downside. I highly doubt that we get a big flush to clear out sell side, ultimate external sell side down here. I don't think we're gonna get a flush, especially not tomorrow. Some crazy news has to come out for that, but we will see what happens tomorrow. But this will be the rejection zone that I have anticipated for Google for tomorrow. All right. Now Meta. Wow, look at that. Looks like Meta is definitely showing face here. Let's see where we were at here on a daily. All right, so Meta's got a gap here. Okay, they got a gap here that I can fill. This is going to be the 660 level all the way down to 637. So price does have to come fill that gap eventually. Price also has a gap at 685. It's just been consolidating, so I don't really have a clear bias here. When we go to a smaller time frame and try to find these fair value gaps so we can have an idea of what price wants to do, if we go off of what price is doing now, it looks like it filled a level in this wick that I had marked out, some fair value gap I had probably on a smaller time frame. Filled it, rejected it. Now we can anticipate either a sweep here, which is 660. Like I said before, that gap there, I got my alert set for that. Or if price wants to be bullish, the level for us to tell if we're going to be pushing to the upside is going to be this fair value gap here. We get a closure above this $5 away. We get a closure above the 670 level, that we could possibly use that as our new floor, and uses as rocket fuel to get up to this fair value gap at the 687 level. So that's what we're anticipating, but a really wiki. Lots of barcodes. I'm not sure what Meta or Facebook has got going on. Yeah, I think the biggest talk is how they're reducing spending for that. For the metaverse, man, they really spent a lot of money trying to promote that, and they were selling like virtual real estate and stuff like that. So they did pull back on that. They got a spike to the upside because of it, but as I said on the previous live, just because someone cuts back spending doesn't mean that stock's going to be bullish. I thought it was silly for them to anticipate price being bullish because of them cutting spending on metaverse. That's not good news. So we'll see what happens here, but it's just accumulating. So don't be surprised we get a manipulation phase and then we finally see where price is ultimately trying to go. So that's what we got for Facebook. Nvidia is the talks right now. They're a part of this trade war right now. I'm absolutely bullish on Nvidia. But this is the level that we have marked out before. So this is just going back to what I was talking about, guys. So we've been marking up Nvidia all week before they announced that they're going to be exporting chips to China. But as you can see, we have our levels marked out. We were bullish before the news, guys. We had equal highs resting above here that the price absolutely swept. We also have a gap that price had to sweep as well. And then after all that got cleared out, clean up our charts here. After all that got cleared, we have a bullish engulfing candle here. Price retraced into the fair value gap, filled the fair value gap, used it as jet fuel, and it absolutely took off. Okay, so yeah, I mean, the strategy still works regardless of the news event. Just wait for a sweep, wait for a fair value gap, wait for the retrace. But you hear I'm saying wait, wait, wait. So that's what it takes, guys. But yeah, if we can get a retrace down to 188 for NVIDIA, then we can absolutely see a higher price. If we can get an entry anywhere about around there. But if prices absolutely starts pushing tomorrow market open, 190 will be our new ceiling if we want to see some type of jet fuel from. So closure above 190 will tell us that we are absolutely in bullish order flow if we can invert this fair value gap, and when we can clear out this buy side liquidity and possibly target this gap and fill this gap over here to the left. But as you can see, all of this right here just tells me that there's a lot of buy side liquidity that price wants to come stop these shorters out. So we'll wait for that. But this is the line in the sand, 190. If we're bullish above 190, look for calls. Okay, it's really that simple. All right, Tesla. Boy, oh boy. Boy, oh boy, oh boy. Some of the boys have been going for a ride on this one. Some consolidation here. Let's go to the 1 hour time frame so we can clear this up. We do have a gap there as well. Retraced into a previous fair value gap. Bounced off of that level, but it did push into this FVG here. So TP should have already been taken for those of you guys that are trying to take that bounce. And we got to see if it holds this FVG here. So we're bouncing between two fair value gaps. If price can close above 442, which is only $3 away, then we can be bullish. If price closes below, I'm going to say 437, $2 south, then yeah, we can see short lower prices and possibly start taking out sell side. So, but until then, we are definitely bouncing between two major institutional levels. So I really don't have a frame bias on that. Just from how I know how candlesticks print, I can possibly see another equal extension move to the downside, which would ultimately target the sell side liquidity. But I want to wait until tomorrow when we get a little bit more data before I want to call out shorts for Tesla. Those of you guys that trade stocks, you guys already know how bad Tesla can be. So let's not get burned from that. So that's what I got for you guys there. Let's go ahead and take a peek at MSTR, which we talked about before. It looks like it's still flat. We want to see price close above this fair value gap 191, and that's going to give us a buy signal for Bitcoin as well. So until then, price is still accumulating, still barcoding here, and it's not really giving any clear direction. So let's go ahead and switch over to gold first. Not a whole lot going on. Like I said before, we got this line in the sand here. We want to close above 42.38 for us to truly be bullish. Price is still barcoding. So gold is still in the accumulation phase. We'll see on Wednesday when Feds make a decision on the rates how price is going to move for gold. So right now it is barcoding, and then it's going to give everybody a fake out, and then it's going to deliver to the direction that it wants to go to. Oil is dipping. Oil is below $60 a barrel from the last time we looked at it, guys. I do see some bearish order flow on oil. If we can, guys, if we can sweep $57, we can absolutely expect to see some political news event happening. But with things de-escalating, the price of gold is just going to drop. So expect lower gas prices, right, for the next 6 months. So that's all that means. Price of oil is $58 a barrel. So fill up your cars. It's probably the cheapest it's going to be for a little bit too. Bitcoin is still consolidating. We are still at the 90,000 level. We have not cleared the 84 or the 75,000 level I was anticipating yet. It's just been barcoding. But if we can see price rejecting some of these order blocks and coming to the downside, creating lower lows, then I can be more confident that we're going to target the 75,000 level for those of you guys that might be wanting to short Bitcoin. But we are still literally on the line. Okay, 90,000 is the line. If we close below 90,000, I'm bearish again. If we continue to stay above 90,000, then I'm going to be bullish. But right now, I am going to be bearish. I'm still bearish. I still think we're going to clear the 75 level for sell side. Matter of fact, let me just set my alerts here so I don't forget and I'm not caught off guard. So I'm setting my alert at 88,000, and I'll set another one here just for volatility at 92,000. So Wednesday is going to be interesting. Wednesday is going to affect crypto just based on how it's consolidating. It's going to affect commodities or metals, which will be gold. I don't think it's going to affect oil. And then more importantly, we can see what happens in the equities market as well. I want to take one peek at my favorite stock right now, which is UEC. As you guys know, leading up to current price, $11.99 is what I was expecting us to close above. So we did close above the $12 level. Here we are retracing into a fair value gap from the $14 level down to 13.47. So if you guys want to catch an entry on uranium, you guys already know that I mentioned before that we are having an energy shortage right now. So all the countries are fighting for energy so they can power the AI technology, and they can create semiconductors and all the stuff. We do not have enough power to power our planet. Power to power our country. So that's what they're fighting over. They're fighting over minerals that they can use, such as uranium, so they can generate nuclear energy. Okay, that's the most efficient energy source that they can come up with. Crude oil is outdated at this point. So retracing to this fair value gap, it is sitting there, offering fair value to us. If you want to see, some type of bullish order flow tomorrow, you want to see it respect this level and candle closure above the 1428 level and climb our way all the way up to $16 and then make a new all-time high. So as close as you can get to this area, which we marked out, which is a $13 area, 1326. You want to get an entry as close as that as possible, and then we want to hold that level to possibly take out some of these highs. All right, so that's what I have for you guys for a market breakdown. Feel free to join the Discord. The link is in the description. Let me know if the audio is a little bit better. It looks like it is based on everything I'm looking at. And if you guys have any stocks that you guys might want me to break down, or if you have anything in the market such as Forex pairs and so on, let me know. I'll look into that as well. But let's just go ahead and look at some of these Forex brokers we might be able to use for the upcoming trading session. So I'll switch over here, and we're going to go to, I'm going to get the browser set up for us here, guys. Give me one moment. All right, so we got Market AI, but we're going to switch over. Yeah, we got Google up. Cool. So let's see. Let's look at, I don't know. Let's look at Top Step. I think Top Step has a, let's take a look here. No, I don't want to log in. So this is the futures program, but this is, I want to look at this one more time. $89, no consistency rule. And more importantly, I don't see any withdrawal limits. There's no activation fee, just like, such as like Apex. Apex has the activation fee. But I would recommend you guys checking out Top Step when it comes to, and I'm not affiliated with any of these guys, but I do like this plan right here, this $50,000 plan. For $89, no consistency rule. That means you could pass it with 1 or 2 trades and be done. That's what I like to see. I don't really like to play too much games. But we're going to go to Trustpilot. And top Forex brokers. Oh, yeah, I don't like that. Yeah, I thought they were just going to tell me, yeah, they're not going to do it. Okay. We'll just do this. All right, FTMO. Wow, FTMO is offering U.S. clients accounts again, guys. So these guys have been around for a long time, since I was first starting my trading journey. I just want to see what they have for challenges. So let's take a look here. Of course, we're making an account. We're not doing that, guys. Let's just see your challenges. Here we go. So, look at that. They got 20% off their 100K account. Step 1, you got to make 10% of the account. Step 2, you got to make another 5%. So you got to make a total of 15%. The account's $500. Okay, so it's $499. You can trade as many days as you need, so you can pass. But once you pass, you get your $499 back. That's fantastic. So you get your $499 back. I do think you get your $499 back after you get a withdrawal on the funded account, which is nice. You got a 50,000 account here as well, so that's for $399. But let's look at their max loss. So trying to set a 10% initial loss. So you got 10% the risk, and you got a profit. I'm sorry, you got a daily loss limit too. Wow. So you got a daily loss limit of 5%, and you got a max loss of 10%. But you have to profit 10%, and then step 2, you got to profit 5%. So that's not bad. That's not bad for $499. I do think passing a futures account or prop firm would be a little bit easier than Forex. But if you guys want to make some big money, guys, definitely use the leverage from Forex. That definitely outpaces futures for sure. You're gonna have to copy trade 10 accounts to make some of the profits you can make on Forex. So in fact, I am thinking about coming back to Forex here, but I want to teach you guys all I can on futures first. So that's what we got for FTMO. As we can see here, actually I'm gonna leave this up so we can compare them. So we got that. I'm just gonna leave it up here. I'm gonna use the back button to go to the other one. Okay, so all right, so that we got FTMO. I don't know these guys. Tradeify, I heard of these guys. Let's click on theirs. There's really two more I want to look at. All right, so Tradeify. I see them advertising a little bit here. Let's look at their stuff. 100K account, 155. Okay. Profit target 6,000, so they got a lesser profit target. Max drawdown 3,000. 40% consistency rule. Now, I did not see FTMO mention anything about a consistency rule, but they do say you can keep up to 90% of your profits, so that's nice. So there's a 90-10 profit split, but yeah, I don't see anything about a consistency rule with FTMO. But this account is $4.99 compared to $155. That's interesting. What's up with all these pop-ups, man? All right. Trade of a prop. Wait a minute. This might not be. Yeah, actually, this is not. This is futures, guys. That's interesting. All right. Yeah, I don't like that. Let's go back. Let's go back. That's futures. Funding Pips. I used to have an account with these guys. They had some interesting rules. It's the only reason why I left them. All right, here we go. 100K account, two-step, $100,000 account. Looks like it's the largest that they offer. $529. We compare that to FTMO. $4.99. All right, let's see. Okay, so you got to profit 8,000. Same loss limits. You got to trade for a minimum of 3 days, and that's your leverage. Okay, so you spend a little bit more money. Where's your consistency rules? Oh, they get 100%, 90% on demand, 100%. Okay, this is interesting. Just reading here. Their rules, man. Their consistency rule was a lot, man. It was a lot to deal with when I was trading with them before. Then let's look here. Let's see if they still have it. No, I don't see anything about it. But make sure you guys do your own research, guys. Some of these, when it comes to Forex prop firms, man, that's why I left it, because it can get a little muddy there. So right now, I do think that FTMO might be the best option right now. We got E8 markets. Let's take a look at them. I used them before as well. I used to have an account with E8 markets. Let's just look at their accounts. See if they change anything. $100,000 account. You can select your drawdown. That's interesting. Let's just do a 10% drawdown. See what happens. Wow. So you can adjust your drawdown to what you can afford. Now that's interesting. 4%. Wow. If you can truly, let's see, what's your profit target then? 6%. Wow. So if you can profit 6% with these guys and have a drawdown of 4%, you got to manage your risk correctly. 398 is not bad for this challenge. I'm not gonna lie to you, but MTR, I don't know what trading platform that is. Let's see, if you want 90% profit split, which means you take 90, give them 10, it's 445. So you pay another $50 and get that. Or if you want 100% of your profit split, you can spend another $50 and get that. So 493. Let's let it match FTMO. 493, 90% profit split. It does cost a little bit more, but this is one step. You don't have to make 15%. I'm sorry, you do have to make 15%, but it's one step. That's not horrible. That's not horrible. Oh, they got futures. Whoa. E8 offers futures accounts too? Okay. 50,000 account. Oh, they're priced out though. They're not as good as yeah, they're not as good as my funded futures, that's for sure. But $100,000 account for 260, yeah, Top Step got them beat as well. But going back to Forex, guys, you can use MetaTrader 5. Nice. You can use Trade Locker. I don't use C-Trader, but you can use MetaTrader. I like that. $100,000 account. Let's say I want an 8% drawdown. I want 90%. 650. Okay, 656 is what it's gonna cost. So you guys can play with this, but I like this. This isn't bad. I don't see anything about a consistency rule, but I haven't dove that deep into the rules yet. Let me see if they can. Just a quick scan here. Scale your account. Custom evaluation. Raw spreads or commission-free trading. That's interesting. Fast payouts. Keep up to 100%. It's not bad. I like it. Register earning. Yeah, you guys check this out. I like E8. If you guys have any experience with any of these guys, let me know. And they got a little discount code at the top there. You get 25% off this month. So, not bad. But that's what I got for you guys with prop firms. And if I see any more, I'll do another live and we can talk about it. Or if you guys have any props that you guys want me to check out, make sure you guys let me know. All right. Other than that, thank you guys so much for joining me. Like I said before, hopefully you guys are getting something out of this. If you guys need a little bit more hands-on teaching or mentorship, make sure you guys join the Discord. I'm active in there. I got a lot of people that's been in there for some years, and these guys are keeping me up to date with the trading journeys. People are DMing me all the time, trying to keep me up to date with the trading journeys. I really, really get excited about that, and hopefully I can help you guys in the future with that as well. But I'll try to do another Zoom tomorrow morning at Market Open. I'll see you guys tomorrow. I'm looking at my calendar now. It should be good to be on here tomorrow morning. So that's going to be what I got for you guys today. Thank you again, once again, for joining. Make sure you guys like, comment, subscribe. Click the link in the bio. Turn on notifications. I'll see you guys on the next one. Peace.